Have you ever looked at the world and just wondered why some countries are incredibly wealthy while others are stuck in poverty? Or how gigantic fortunes can be created and then vanish almost overnight? The answers aren't just about hard work or natural resources. A lot of it comes down to a force that shapes everything: finance. Today, we're diving deep into a modern classic, Niall Ferguson's The Ascent of Money. This book is an epic journey through history, revealing how money, credit, and markets have been the engine behind the rise and fall of civilizations. And trust me, this isn't some dry, academic history lesson. This is the secret operating manual for the modern world. By understanding where money came from, we can better understand where it's going and how we can navigate our own financial futures. So, if you're ready to unlock the secrets of how finance truly shapes our world, let's get started. To understand our complex financial system, we have to go back to basics. Let's start with money itself. It feels so simple now, tapping a card or a phone, but its journey is incredible. We started with bartering you. I'll trade you 3 chickens for that goat. It was inefficient and messy. The big breakthrough was creating a common medium of exchange, first with things like shells or salt, and then standardized coins made of precious metals. Terra Lipa, however, came when money became an idea, a promise. That's what paper money and digital currency era system built entirely on trust. We trust that the number on the screen or the bill in our hand has value. Without that collective belief, the entire system collapses. Now, once you have money, you need a place to keep it safe and make it work for you. Enter banking. The origins of modern banking can be traced back to medieval Italy, specifically to the benches or banca in the marketplaces where money changers did their business. Their genius idea was this: instead of just guarding people's gold, why not lend a portion of it out to others who need capital and charge interest? This is the birth of fractional reserve banking. They realized they only needed to keep a fraction of deposits on hand for withdrawals, because not everyone would demand their money back at once. This allowed them to create credit out of thin air, fueling business and commerce. It's a system based on a delicate balance of trust and risk, a balance that is still at the very heart of our economy today. But what if you need to raise a truly massive amount of money, more than any single bank can lend, say, to fund a war or build a railroad? This is where bonds come in. A bond is basically an IOU. A government or a large corporation needs cash, so they issue bonds to investors. In return, they promise to pay back the principal amount, plus regular interest payments, over a set period. This invention, which really took off in the Italian city, allowed governments to tap into the wealth of their citizens to fund huge public projects and military campaigns. It created the concept of national debt, something we hear about every single day. Bonds transformed the scale of what states could achieve. Then came the next evolutionary step: stocks. What if you wanted to fund a risky but potentially hugely profitable venture, like a long-distance sea voyage to the East Indies? The risk was too great for any one person or even the government. The solution was the joint stock company. The Dutch and British East India companies were pioneers. They sold shares or stocks to the public. Each shareholder owned a tiny piece of the company. If the voyage was a success, they all shared in the immense profit. If the ship sank, their loss was limited to their initial investment. This concept of limited liability was revolutionary. It allowed for massive risk-sharing and mobilized capital on an unprecedented scale, paving the way for the modern corporation that defines our world. So we have money, banks, bonds, and stocks. These are the building blocks. Now, let's see how they evolved and interacted to create the complex, sometimes chaotic, global financial machine we know today. One of the biggest problems with all this economic activity, especially early on, was risk. A storm could sink your ship. A fire could burn down your warehouse. This is where the brilliant idea of insurance comes in. It started with maritime traders in places like Lloyd's Coffee House in London. Merchants and shipowners would meet with wealthy individuals who would, for a fee or a premium, agree to cover the financial loss if a ship didn't make it back. They would write their name under the description of the risk, literally underwriting it. This simple act of spreading risk from one person to many was a game. It made long-distance trade viable and has since expanded to cover almost every aspect of modern life, from our health to our homes. Speaking of homes, let's talk about real estate. For most people, their home is the single biggest asset they'll ever own. The ability to buy a house is made possible by the mortgage, which is essentially a long-term loan secured against the property. This has been a massive engine for wealth creation for the middle class over the past century. But it also has a dark side. When lending standards get too loose and people start speculating that house prices will rise forever, you get a housing bubble. We all saw what happened in 2008. The housing market became a casino, fueled by complex financial instruments built on risky mortgages. When the bubble burst, it didn't just hurt homeowners. It triggered a global financial crisis, demonstrating how interconnected and fragile the system can be. This interconnectedness is the defining feature of modern finance, and the boom and bust cycle isn't new. Ferguson walks us through history's greatest speculative manias. There was the Dutch tulip mania in the 1630s, where a single tulip bulb could cost more than a house. There was the South Sea bubble in Britain in the 1720s, a frenzy over a company with very few actual assets, and of course, the stock market crash of 1929 that led to the Great Depression. In each case, a new financial innovation, combined with human psychology, greed, fear, and the herd mentality, led to a speculative frenzy, followed by a devastating crash. The technology changes, but the human element remains dangerously consistent. So, what are the big takeaways for us, right here, right now? How can this grand sweep of financial history help you manage your own money and build wealth? First, and most importantly, understand that finance moves in cycles. History doesn't repeat itself exactly, but it often rhymes. There will always be booms, and there will always be busts. The emotions of a market bubble, the euphoria, and the fear of missing out are the same today as they were 400 years ago. Being aware of this cycle and recognizing the psychological signs of a market top or bottom can save you from making catastrophic decisions. When everyone around you is screaming to buy, it's often time to be cautious. When everyone is panicking and selling, that can be the moment of greatest opportunity. The second key lesson is the absolute importance of risk management. This is the core principle of everything from insurance to a diversified stock portfolio. Don't put all your eggs in one basket. The founders of the first joint stock companies understood this. Modern portfolio theory is built on this. Spreading your investments across different asset classes, stocks, bonds, real estate, and geographies is your best defense against the unexpected. History teaches us that black swan events, things that are impossible to predict, happen all the time. Diversification is your personal insurance policy against them. Third, appreciate the power of institutions. A stable and prosperous society needs trustworthy financial institutions. A reliable central bank, regulated commercial banks, and clear legal protections for investors and property owners. When these institutions break down, as they have at various points in history, the result is chaos and economic collapse. On a personal level, this means choosing to work with reputable, well-regulated financial companies and being a citizen who understands and advocates for a stable financial framework. It's not the most exciting part of finance, but it's the foundation everything else is built on. This brings us to you. Understanding these macro patterns directly informs your personal financial strategy. Knowing the history of debt and interest helps you use credit wisely, avoiding the traps of high-interest loans. Understanding the cyclical nature of stock markets helps you stay the course with your long-term investments instead of panic selling during a downturn. It helps you identify bubbles and avoid getting caught up in speculative fads, whether it's tulips or the latest trendy investment. Ultimately, the biggest takeaway from the Ascent of Money is a mindset shift. Money isn't just paper or numbers on a screen. As Ferguson argues, it's a social construct. It's a story we all agree to believe in, a story about value, trust, and the future. By understanding the history of that story, you move from being a passive pawn in the financial game to an informed player. To wrap it all up, Niall Ferguson's The Ascent of Money shows us that the history of finance is the history of human progress, with all its genius, its greed, and its follies. From the invention of coinage to the complexities of today's global markets, Finance is the invisible force that has shaped our world. The lessons are clear. Understand cycles, manage your risk, and appreciate the institutions that provide stability. The better you understand the past, the better equipped you are to build a secure financial future. This summary just scratches the surface, so I highly encourage you to read the book for yourself. It will change the way you see money and the world around you. What's the most surprising thing you've learned about the history of money? Let me know in the comments below. Thanks for watching. And if you found this valuable, be sure to like and subscribe for more deep dives into the ideas that shape our world. See you in the next video.